Mswati inkosi ithula akayithathe akahambe nayo akayithathe yedenza bakewone akayithathe
Your time now is 2 p.m. and this is the Tuesday edition of Market View right here on Eswatini TV. Glad to be your host. On the program this afternoon, developments in the Middle East are sending shockwaves through global trade routes, affecting the flow of energy and critical commodities. For economies within COMESA, these disruptions translate into rising fuel costs, increased food prices, and growing inflationary pressures, all of which ultimately impact households and businesses. As prices rise, we ask, are these increases purely a result of global cost pressures, or are some players taking advantage of the crisis? Join us as the COMESA Competition and Consumer Commission will unpack its response on the risk of collusion and market manipulation, especially during this period. But briefly, we'll speak to Business Eswatini on the looming fuel supply shortages, which they say are preventable. After this. In our business stories, let's begin here. The war in the Middle East is now hitting home, with local oil companies struggling as procurement costs surge. The result? Empty pumps in some filling stations and motorists forced to drive long distances just to find fuel. The Ministry of Natural Resources has confirmed that global supply chains have been disrupted, and with Eswatini importing 100% of its fuel, the country is feeling the pressure. Delays in delivery and limited supply are now a reality. While the ministry assures the nation that fuel is still available, with some stations now rationing it, it also warns that prices are expected to rise, with new adjustments to be announced soon. Engagements with oil companies are ongoing to manage the situation, but beyond the pumps, what does this mean for businesses on the ground? We are joined via video link by Business Eswatini's Chief Executive Officer, Inathi Dlamini, to give us the business perspective. Nkosi, good afternoon. Thank you very much for your time. How severe really is the fuel situation right now for businesses on the ground?
First of all, thank you for having me, and I'm glad that we're having this extremely topical conversation, because if the current situation is not managed very well, then there is a huge looming risk that's on the way.
Well, see, a statement by Business Eswatini, or at least a document that was brought to my attention, makes mention of premiums of between 5 emalangeni to 9 emalangeni per litre, which is actually quite the hike when you look at it. If fuel procurement costs just keep rising, are businesses prepared to absorb part of the increase, or will the fuel burden then just have to be passed on to consumers?
I'm very, very glad that you raised that subject of the 5 rand is what you call the trader's premium. And I would explain that very, very shortly. You will know that when you buy fuel and you pay 20 rand per litre, do you know what you're paying for? In that 20 rand, there is customs and excise duties. There's the road authority levy. There's the ESERA levy. There's the MVA levy, there's the ENPC levy, and then there's what you call a dealer's margin levy, and then there's a wholesaler's margin levy. The base price of fuel right now, which means the wholesale price from the global world, which is a ubiquitous price, is probably around the 10 rand, right? All of the other component of the pricing is made up of levies. Now, the traders premium that you mentioned about 5 rand, that has just shot up. It used to be 20 cents as part of the fuel price, and now it is shot up to 5 rand. So the wholesalers are saying we cannot afford to bring stock at a 5 rand premium because we are not able to recoup that from the retailers. So we're in a quagmire currently. And we've just been told that the prices of fuel may be going up, and then certainly that's unavoidable. But we did engage government last week. Firstly, you know that most of our fuel comes from South Africa. Engage government if they could open the Mozambique border, that was the Minister of Finance last week. And we are very, very pleased that he was very receptive and indeed opened those borders. The question now is, are the fuel buyers here at home willing to pay for that premium price? Because in Mozambique especially, they still have stock of fuel. If you can afford it, that's the situation that we're having to deal with here. And if the fuel price goes, as indeed it shall very, very shortly, the question is, how will government help meet that expense? Because a very sharp rise will not only be inimical to business interests, but certainly you just totally deleterious, if not just disastrous on businesses, and certainly on individuals as well. And thirdly, it would bring pressure to the inflation equation if we just do it recklessly. And currently now inflation is standing at 1.9%. And we'll see all those gains in inflation being reversed. Why? Because of fuel prices. So we asking government, and I'll probably use it in a stronger term to say, we just beseech government that they try to meet us halfway, either by looking at the duties that form part of the price of fuel somewhere, or by subsidizing part of the fuel price increase, because none of us can stomach a 10, 20, 30% rise in fuel all at once. None of us can do that, certainly none of the businesses.
Now, of course, in the interest of time, we'll leave it here. That was Nathi Lamine, Business Eswatini's Chief Executive Officer, just unpacking how the rising fuel procurement costs, and their impact on local businesses. Moving on with our news this afternoon, 240 members of Guyendega Sako will benefit from the Women's Microenterprise Mentoring and Capacity Building Project by the Taiwan International Cooperation and Development Fund in collaboration with SEDCO and the Ministry of Commerce, Industry and Trade. Participants will access loans ranging from 4,200 Malangini to 42,000 Malangini to grow their businesses. Eligible enterprises must have between 0 and 20 employees.
Behind every small business, there is a great entrepreneur, a loving family, and a dream. We are here to help that dream grow. This program is simple. We will walk with you step by step, helping you understand your business, managing your money, find more customers, and grow with confidence. You won't be alone. There will be mentors to guide you, training to build your skill, and for those ready, support and funding to help your business expand.
SEDCO Chief Executive Officer Kethiwe Mhlanga and Director of Small and Medium Enterprises at the Ministry of Commerce, Industry and Trade, Mluleki Dlamini, say this funding is critical for small and medium enterprises as they continue to struggle with access to finance.
We would like to, more than anything, encourage our entrepreneurs to continue to be resilient. Business is not easy, but you need to have thick skin. And we have seen through all the studies that have been done that the most issue that we cry about as entrepreneurs is the access to finance. And this project has been instrumental in ensuring that our women have access to finance.
This program is not just an initiative, but it is a commitment jointly from all of us that we want to equip entrepreneurs with tools, mentorship, and also network they need to thrive. We also are committing to digital transformation, ensuring that our MSMEs are competitive in regional and global markets. This commitment is inclusive of growth, where the youth and women and entrepreneurs in the rural areas are not left out in this initiative.
Some of the beneficiaries say the funding comes at a critical time when they need to improve their businesses.
The funding itangsita since I was looking for indawo lenkhulu letimbuti titophuma tiyodla khona.
Ngesikhathini lesiningi ngingikhanze mina lama customers sekamela mina ukuthi kuvuthwe kanti nase ngithole le funding ngidawukhona lokuthi ngikhulise kahle.
Ngibuka ukuthi itangisita kakhulu ngoba ma ukutele mali bese kusafarisha nje employment opportunities, because when the business suffers then nebamfu bese bakhanza ukuthi sothi abahlale ngasekhaya.
Ngirana i-guest house. So, swimming pool.
The program is expected to strengthen financial transparency, managerial capacity, and market competitiveness of participating enterprises. It also aims to support the development of a pipeline of growth-oriented businesses contributing to job creation, income generation, and inclusive economic development in the country. Reporting, Nelson Dlangamandla, Vuminkosi Nzinisa, Ezulwini.
And that is your business brief this afternoon. After the break, we speak to CEO of the COMESA Competition and Consumer Commission.
Those that are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit.
I declare that a turnaround is coming my way.
Turnaround is coming in my life.
Welcome back. This is Market View, and moving on with the program, the COMESA Competition and Consumer Commission has warned businesses across the region to cease price gouging, hoarding and other unfair trade practices immediately, with escalating tensions in the Middle East disrupting supply chains. Essential goods are at risk and regional markets face potential instability. The Commission stresses that companies taking advantage of the crisis to exploit consumers will face swift action. We're now joined by Dr. Willard Mwemba, CEO of the COMESA Competition and Consumer Commission, to discuss in detail how the Commission is responding to these challenges, protecting consumers and ensuring that businesses operate within fair and transparent trade practices. Dr. Mwemba, good afternoon. Thank you very much for your time. Allow me to start here. In fact, we do want to hear it from the Commission. Which sectors are currently under the highest risk of anti-competitive behavior, especially during this Iran-US-Israel crisis?
So thank you so very much, Sanotsile. Thank you for having me. The Iran USA or Middle East crisis, as we know it, is potentially causing disruptions to supply chains. And the immediate sectors that are affected or are likely to be affected by this crisis is the energy sector, in particular the oil sector. But that is likely to have ripple effects into other sectors. And one of the sectors that we are so concerned of with lots of fear would be the agri sector. You remember, or you may be aware, not silly, that the oil crisis or the oil sector plays a bigger part into agri through fertilizer. And if the oil sector is not working well, fertilizer prices are likely to go up, seed prices are likely to go up, and that then affects our small-scale farmers, who are the main growers of the staples that we consume. So there's a biggest fear in the oil sector itself, with ripple effects most likely to be felt in the agri sector, especially prices of fertilizer.
Agricultural sector, Dr. Member, is among those at risk. Does this then raise concern about second round inflation in some way when we talk food security?
Of course, that is very correct. That is very correct, and I like the term that you use, second round inflation. The crisis that we are seeing in the Middle East is observable, is evident to all of us that it has resulted in an increase of fuel prices. So already inflation is going up as a result of fuel prices. This will again have ripple effects on prices of almost all goods, because they depend on the transportation system, which is reliant on the fuel system. So we are likely to see secondary, third, or even fourth generation inflation with a snowball effect. An exponential effect. So yes, there is that fear, and with that, the confidence in our markets is likely to be eroded, coupled with, and I should emphasize, what we are talking about is the objective reaction of markets to high prices caused by the crisis. But in there is also an artificial escalation of prices by operators in the market trying to take advantage of the situation and increase margins for themselves and profits. So yes, genuinely, because of what is happening, we are likely to see ripple effects. We are likely to see an exponential increase in inflation caused by the situation. However, unscrupulous businesses are also likely to take advantage of this to enhance margins to themselves, to the detriment of the consumer and to the detriment of our own economies at large.
Dr. Member, the inflationary impact of this conflict is inevitable, and consumers are soon to feel the crunch, if not already. What immediate actions then is the Commission taking against price gouging?
Thank you, Anosile. So, yeah, indeed, the inflationary effects, we are already feeling them in a number of countries within COMESA and outside. We've already seen an escalation in the fuel prices. So we've already seen that. What we are yet to see is what you stated earlier on, the secondary inflationary effects, because now we are expecting to see an increase in the prices of other things. Now, price gouging, as I said earlier, it is companies taking advantage of the system, of the situation that is before us, and then making unreasonable margins out of that, giving an impression that the price increase is as a result of the crisis, when not. So the Commission takes that issue very seriously. As you may know, a number of our citizens, a number of our consumers in the common market for Eastern and Southern Africa, including Eswatini, Nosile, are very poor people. Most of them living below $8 every year. Such behavior, in addition to the crisis itself, in addition to the effects, negative and foretold effects that are happening on consumers, those that are inevitable, Such behavior of price gouging is even likely to make it worse and exacerbate poverty. Our intention, most of us and governments, our intention, in fact, is to alleviate and reduce poverty levels on our continent and in COMESA. Price gouging is in fact likely to escalate that situation and make it worse. So the Commission takes that very seriously. And the initial thing that the Commission can do, not silly, is to sound warning to businesses that we are watching. And any instance of price gouging, any occasion of price gouging in the market, we will not take it kindly. But I know the question that even your viewers may be asking, not silly, is why is the Commission, in fact, not already instituting an investigation against price gouging? Remember, this is a crisis that is just about 4 weeks old. Remember, the increase in fuel prices that we've seen are probably about 2-3 weeks old at most. So the wheels take time to turn. These effects that we are seeing, to start seeing them in reality outside the fuel crisis may take a little longer. And we are saying once it happens, because we know there are clever and unscrupulous businesses who are likely to engage in this to take advantage of that. We are monitoring and actively monitoring on a very daily basis, tracking prices, tracking goods, making sure that the goods are available and not where people are telling us that, for example, there is no fuel, and yet they are trying to hoard. In other words, we refrain from selling until a higher price is announced tomorrow, then they take advantage of that. We are watching on stocks, we are watching on prices, and we have mechanisms of actually telling, not silly, that the price increase is not a natural consequence of the crisis in the Middle East. The shortage of fuel or the shortage of any other commodity for that matter, we have tools to determine that it's not an exact or immediate consequence of the crisis in the Middle East, but unscrupulous businesses trying to take advantage of the situation. So what we are doing, to summarize, is that number one, we are monitoring and watching the markets every day. Number two, we are very good because we have warned businesses. They should be aware that we are watching, and once they engage in that, we will crack our whip.
Fair enough. We'll leave it here, Dr. Mwemba. Thank you very much for your time. That was Dr. Willard Mwemba, Chief Executive Officer of the COMESA Competition and Consumer Commission, just unpacking what the Commission is doing to ensure fair trade practices, especially during this time of vulnerability, especially given the conflict in the Middle East. After this, we speak to in-house economist Sanele Sibia.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, visit www.esccom.org.nz.
Welcome back for our market analysis segment. We're joined by in-house economist Sanele Sibia. Mr. Sibia, good afternoon. Thank you very much for your time. So far, no sight of a ceasefire or a deal in Iran. What's your reading of markets? Sibia, are you still with us? All right, while we wait for our in-house economist, let's just have a look at how currencies, or rather the Lilangeni, is performing against some of the world's strongest currencies, starting off with the US against the US dollar, trading at 17 emalangeni and 15 cents, and against the euro we're currently looking at 19 emalangeni and 66 cents. Moving on to the Japanese yen versus the Lilangeni, is currently trading at 9 Japanese yen and 31 cents, which is rather an increase by at least 0.10%. And moving on to commodities, the gold is looking closer to at least hitting the $5,000 mark. It's currently trading at $4,574 per ounce, and it's up by 16, or rather 0.36%. And moving on to crude oil, currently trading at $108 per barrel, and it's up by 0.67%. Right, we now have Mr. Sibia on the line. Mr. Sibia, good afternoon. We just went through the visual, all the graphic there of currencies and commodities. How are things looking when we're looking at equities?
Thank you, Notsile. So on the equities front, good afternoon to you, and also good afternoon to the viewer. So on the equities front, Notsile, what we are seeing is a bit of that volatility still in the markets. And we're seeing, a move back towards those defensive stocks, or those what we call old economy stocks. And that is actually quite far seen when you look into the US markets, where the Dow Jones Industrial Average actually is up some 49.5 points. And when you look in terms of the Nasdaq Composite Index and the Standard & Poor's Index of 500 companies, those ones have shown some signs of, losing, with the Nasdaq Composite Index losing 153 points as investors are shifting from those tech-heavy indexes because there's inflation fears, and then also because people are looking for those defensive stocks. And then when you go over to the European markets, we're seeing a bit of resilience on those markets, Notsile, largely pushed by the fact that, Europe, more especially London, that's the FTSE 100, has quite a number of those companies that we call the old economy stocks. So Europe, we're seeing the FTSE 100 up 69 points, Germany is up 161 points, and the CAC 40 is up 42 points. Those are largely driven by those oil stocks and, the mineral stocks. And then also just the financials, as we are looking at the earnings season that is coming through in London, and the fact that we have those defensive stocks. Most of them are listed within London and Paris and Frankfurt. And then coming into Asia, so Asia is still really struggling with the oil price fears. Japan continues that losing streak, losing 822.13 points, largely driven by, that shift from the tech stocks towards more defensive stocks. And we do know that the Nikkei is largely, laden with those technology stocks. Hong Kong is somewhat muted there, around 24,000, up some 37 points, just getting a bit of that optimism around, those defensive stocks, while the mainland China is also really being hampered, sitting at 3,091.86 in terms of overall share volumes. Coming down to South Africa, because of that rally that we are seeing in gold, and, with investors showing very strong signs of positive sentiments around the South African economy. And then also, just given the fact that gold continues to rally, the Johannesburg Stock Exchange is back at 113,000 in today's trade, gaining 127 points. In Eswatini, we've not seen any changes. And then we've also gone through the commodities there. It's driven by the fact that we are seeing, gold rallying because of the uncertainty, and the price of Brent crude oil staying above the $100 $100 mark because they offer, President Trump's sentiments around capturing the Strait of, capturing Kag Island indefinitely. And now that also sends jitters to the oil markets. Coming into the currencies, the Lilangeni is relatively stronger today against all major currencies, given that rally that we are seeing in South Africa and the shift back towards those gold stocks because, the uncertainty makes gold a relatively lucrative commodity. And then also we're seeing the shift towards those defensive stocks in South Africa with the likes of Bidvest Water, and quite a number of those water-related and those consumer-related commodities, just taking somewhat of a positive shift. And then overall, we're trading at 17.15 against the dollar, at 19.66 against the euro, and one Lilangeni is worth 9.31 Japanese yens, just being really supported by that minerals rally. Thank you, Notsile.
Thank you very much, Mr. Sibia. That was in-house economist Anela Sibia sharing insights on the day's trade. This has been the Tuesday edition right here of Market View, actually right here on Eswatini TV. For myself and the crew, thank you for staying with us. Until next time, take care.